This is the Algo Futures Trader Weekly Market Roundup, and this is the micro NQ for the entire week, so Monday through Friday's trading last week. And the Algo Futures Trader is an opening morning breakout strategy, and it is it can be fully automated right out of the box. This template is already pre-built, and the software will take all the trades automatically. Now, if it did that this week, you see on Monday here, there was a long trade it would have taken, that would have stopped out and then got short, and you would have made some nice money on the short side. On Tuesday, it would have taken the long trades here. Actually, it would have taken just one long trade because it would have been in the same trade when the second trade set up. And then that would have stopped, and then you would have got short here and taken some profit there, and short again here, taken some profit there. On Wednesday, you would have got long initially off the open and then short and then long with a nice profit there at the end of the day. And then Thursday, two short trades basically here and one long, right, profitable. And then Friday, just the short trades there, but nice profitable to the short side. So right out of the box, that's basically what the software would have automatically taken those trades and managed them all for you. But we recommend that you don't do that. What we want you to do is, use some of the filters that are available. And one of those filters is what we call a gap filter. Now, a lot of people trade gaps in and of themselves, but you can also use it as a filter. And it's a great filter to use for your trade setups because these inside, what I call inside gaps, so when the market opens inside the prior day's range, those gaps tend to fill 70 to 80% of the time. So if we know that, that's a huge edge. If we look at the basically the entire week in the MNQ, we had inside gaps all week, right? So the market opened inside the prior day's range every day. And that told us there's a high probability that each of those gaps will get filled during the same day. All right, so how can we use that to our advantage to filter out some of these trades instead of just blindly taking the long and short trades as they set up? What if we could eliminate one side of the equation? So for instance, on Monday, we had an inside gap up. That puts the bias, as you see the arrow here, to the downside. That would tell us in the morning we'd want to eliminate the long side and stick to the short side. So basically we would have avoided the long trade here, saved ourselves a stop out, and just taken the short side. Why? Because an inside gap up, the market wants to move lower to fill that gap back to the prior day's close, which is exactly what it did. On Tuesday, we had another inside gap up. So the market was had a bias to the downside, which meant we would avoid the long trades here and just stick to the short side. So these two short trades here. Another inside gap up on Wednesday. Again, we'd avoid this long trade here and stick to the short side. Now the gap filled after the short trade completed. The gap had filled at that point. And so you would have been free to take the long trade, depending. We have other filters. We have trend filters as well. If this agreed with the trend, we could have taken that later in the day. Now, on Thursday, we had an inside gap down. That means the market gapped down from the prior day's close, but still inside the prior day's range. The tendency there is that it would still fill the gap, but the bias is now going to be to the upside. So basically here the market closed up in here the prior day. We opened down here. So this gap, it doesn't show as a gap here because we're using a 24-hour basically chart here. So what happens is we would avoid the short trades here and just stick to this long trade here later, because what happened is the market made a bottom here and they started rallying all the way till they filled the gap back to the prior day's close and a little bit beyond that. Right now, on Friday was the only day where the gap failed us. So we had an inside gap down again. So the market opened here, it closed up in here the prior day. So it wasn't a very big gap, but it was still an inside gap to the downside. And so that put the bias to the upside because the tendency is they would fill that gap like they did all the 4 days prior. But you can see we didn't get any long trades. It was only short trades anyway. So the only trade that you could have taken would be to the short side here. If you saw the inside gap down and you were wary of that, then you would just not take that trade. Right? So what it did is 80% of the trades this week, or 80% of these gaps, filled during the week. So it's a great, basically a great edge to have on your side, and a great filter. So that's just one of the filters that we utilize, right, with this, and you can actually get this gap filter through our Discord server. And you can see this is our alpha web trader, but we can use this filter where it says gap bias here. And this will tell us in the morning when the market opens if we have like an IGD, that's the inside gap down. If we have the IGU, which means inside gap up, right? Then there are also outside gaps, and we play those completely differently. But anyway, you can get that information, and the bias, you see this is green, so that's telling you the bias is up, and little arrows pointing up, so you know which direction to be focusing on the opening breakouts. And then if the gap fills, these turn black, letting you know that that gap has been filled. All right, well, I hope that's helpful, and we'll do it all again next week.